COVID-19 has drastically changed and expanded investment opportunities in healthcare. But how does the sector look like when taking a long-short approach? In our view, there are potential opportunities in several areas, including prevention, diagnostics, and the provision of a vaccine. Let's look at prevention. Many companies are now producing personal protective equipment such as gloves, sanitizers, and masks. These have been short-term winners. Long-term, though, there could be oversupply and lower barriers to entry in this sector. In diagnostics, companies supplying COVID tests and testing capacity could be structural winners for a couple of reasons. There's an imbalance of supply and demand, and scaling up has been difficult. The development of a vaccine is a race involving many companies and research institutions, but it's likely that no more than a small handful of researchers will find an effective vaccine. In our view, the most promising investments would be companies that have won contracts to manufacture the vaccine once it's approved. There is a group of COVID-agnostic companies for which it has been business as usual. In treatments of diabetes, cancer, and so on, they have benefited from a market rally. But thinking long-term, not all of them will be able to sustain current valuations once the COVID crisis recedes. Over the long run, we believe healthcare should offer a structurally compelling investment opportunity given the high degree of dispersion in stocks within the sector. The greater the dispersion, the more opportunities long-short fund managers have for making outsized returns. Looking ahead, there are two factors we believe healthcare investors should focus on. There's a US presidential election before year-end, usually a big factor for healthcare stocks. Less predictable is a second wave of infection. This doesn't seem to have been priced in by the market. A lot of companies have not taken the risk of a second wave into consideration when guiding full-year earnings. Going forward, we believe that long-term investors could find that a flexible long-short approach might reap rewards from winners and losers in healthcare.